Good morning, traders and investors. Roger Scott here, senior strategist for the Trading Pub. That's right. That's how we roll around here. It's Monday. It's September 11th. Folks, before we get too deep into this video, I just wanted to acknowledge the fact that it's 9/11, one of the worst historic days in American history. For anybody who's lost a family, friend, a relative, a loved one, my heart goes out to you. It was one of the worst days in American history. I was driving to work because I lived in California. I was driving to work. I remember watching it on CNBC, and it just like it happened yesterday. So for anyone who's sad today, for anybody who feels that it's one of those days, I'm with you 100%. This is a day that we cannot forget. All right, let's get into this. Let's talk a little bit about the bright side. Let's talk about what we can expect this week. And boy, oh boy, remember last week was a fragmented week. It was a holiday. There wasn't much going on. It was at Labor Day. People are traveling. Things didn't really start up till Friday, and even on Friday, they weren't really all that crazy. Now, two things. Aside from it being September 11th, we've got earnings after the close on Oracle, and on Thursday, we've got earnings on Adobe. As you can see here, this whole week, there's just not much there. I'll post this in the Telegram channel for you guys, and maybe even in YouTube video. But I would definitely subscribe to my Telegram channel if you want all the goodies. I give a lot of hot, juicy tips and advice and trades. rogerscott.com/Telegram. So keep an eye on the Nasdaq. Adobe on Thursday, Oracle on Monday. We're long Adobe in one of our program. We're long Oracle in one of our programs, actually. And I'm going to have to close it out before the end of the day because I don't like to hold positions during earnings. I don't suggest you do the same. I mean, I suggest you close the position and do not hold through earnings. So Oracle's expecting today, they're expecting good numbers. Right now, the market is looking pretty solid. Nasdaq is up over 100 points, definitely not random. The Dow's up only 50, kind of random. If you look at the Dow Jones, we're below the 50-day moving average. We're still below the 50-day moving average. If you look at the QQQ, we're above the 50-day moving average. And if you look at the SPY, I imagine we're right at the 50-day moving average, right, or we're slightly above. The point is, this is a very important point for the market. This is something that the hedge funds watch and mutual funds watch and large institutional traders watch, because if the market gets below the 50-day moving average, it's not looking all that great. And also, I don't like the fact that this high is higher than this high. It's not a very good look for the market. Excuse my language, not a really good look for the market, but it's not a really good sentiment look, the fact that the highs are getting lower. So the first thing I would like to see is for this market to stay above the 50-day moving average, but then I would like to see it take out this price bar. Also notice the price action was very uneventful. There was very low intraday volatility, which is expected in light of the holiday, and volume was below average. I'm expecting that to pick up. Hopefully this will continue moving higher and will break above the key level, which is 453.85. We need to break above that level. If we just kind of huff and puff and don't really do anything, it's not going to be great. But I think we will break above that level because I think sentiment from Oracle and I think sentiment from Adobe is actually very, very positive. If you look at Oracle right now, just to give you some hindsight, again, I could be wrong, but that's my 5 cents. It's breaking out of a swing high. I think this is an all-time high for the stock. It's looking really strong right now. It's already up $1.44. So we're going to hold on to it for a little bit. And then Adobe, it's also up, and it's also near that same area. And the fact is, the charts on these stocks look amazing, both of them. They look absolutely amazing. So as of right now, I'm still bullish on both stocks. Again, we'll have to get out of Oracle, but we're still in Adobe. Why do I keep saying that? We're not in Adobe. We're still in Oracle, but we'll get out of it before the end of the session. Now, one of my other concerns is the fact that this bar, the bond market, is still below my support level, below the 50-day moving average, below the 200-day moving average, and even below the 8-day moving average, the EMA, which is a good trigger for longs or shorts, depending on what side you're on. Again, I think we're going to come down here, or it may start coming up, but I would be very cautious, especially in light of the fact that the S&P is right at the 50-day moving average. Be very, very cautious of this bar. The other thing we need to pay attention to is crude oil. Crude oil is doing really well. And yes, we're long SLB. But crude oil is doing really well. This is, instead of pulling back, it just goes sideways during a really nasty week last week where there wasn't much volume. I think we're going to break higher. But the problem is, if crude oil prices go higher, it's going to put more pressure on the economy because, airlines have to use oil, and you understand how all that works. I don't want to get into macroeconomics or microeconomics here, but you guys understand that if oil prices go up, it's not great for the economy, and that may impact into the CPI because the price of oil has been elevated for quite some time. I mean, it was for quite some time. It's been above the 200-day moving average, and so the problem here is it may impact the CPI and the PPI, and these are the two reports that the Fed pays attention to more than anything. Getting deeper into it, the core, ex food and energy year over year, it's already highlighted here. I don't even know why, but it is, which is great. They're looking at 4.4. Prior was 4.7. I'll be honest with you. Anything lower is good. But look at the year over year without ex food and energy. See, ex food and energy, they're expecting higher. I actually think when you take food and energy out, they may be similar. The point is, we're looking for these numbers to be lower than previous numbers. And the CPI year over year, when you take out food, when you don't take out food and energy, is actually worse. So again, this may be a big factor. This may be like just something really negative that we focus on. But again, that's something we're going to be dealing with this week. We've got the PPI important report. Again, look for ex food and energy. Look for the number to be lower. Look for the number to be lower. If it goes higher, the Fed will say, it's moving in the right direction, but not fast enough. Then on top of that, you also have retail sales. Let me just go back. Lost my page all of a sudden here. Then you have retail sales. That's going to be a big report. Industrial production. That's going to be a big report. Import and export prices. Folks, inflation. This week is all about inflation or deflation. Something to pay attention to. Small cap stocks are not looking good. So don't expect a big runaway market, but it does look like we can get a nice little power lift on the QQQ, not small caps. Again, small caps are not in vogue right now. In terms of sectors, let's just go over a 3-week period. Tech and energy, look at that. Tech and energy, consumer discretionary, home builders are coming back. Communication, S&P 500. But you could see S&P has a lot of blue chips, all the blue chips like financial, basic materials, industrial, utilities, healthcare, consumer staples, retail. They're all below. So you could see the blue chips, the Dow, is below the S&P and the Nasdaq because it has tech. So you could see just by looking at this, you could see the same thing as I'm showing you, that the Dow, which has the most blue chips, is still below the 50-day moving average, that the SPY is right at the 50-day moving average, and that the QQQ is literally above it. You could see it using this, or you could see it using internals, but at least using internals, you can understand why. You could see that the blue chips have the most pressure, small caps and blue chips have the most pressure, and S&P, because of technology, communication, consumer discretionary, home builders, all of a sudden, they're moving higher. On a 1-week basis, energy, utilities, financial, things were not that great. But I would rather look at a 3-week because it gives us a little better time period. So we got to be cautious right now. Let's talk a little bit about global economy. It'll solidify everything I've been talking about, and then I'll give you guys some tips for today. So, Janet Yellen bolstered hopes that the U.S. economy is headed towards a soft landing while looking ahead at the latest U.S. inflation data due out later this week. That's the CPI and PPI. Yellen said on yesterday, there's increasing confidence that the U.S. will manage to contain inflation without a significant harm to the job market. Every measure of inflation is on the road down. Well, let's see if she keeps saying that after this week is over. I think she will, but let's just see. In coming week, we have CPI for August, core CPI, what the Fed looks at, core PPI, core retail sales, initial jobless claims, import price index, Empire State. It's all about inflation. This week is all about inflation. There's only a 7% chance that they're going to raise rates this month, but there's a 41% chance, almost a 42% chance they're going to raise rates in November, and I actually see this number going higher. I heard somebody yesterday, and somebody that I follow on YouTube, say that the odds are 70% for November, but they're not. They're only 41%. So they're not as high, but they may be going up to 70% by the time we're done. They're keying off of US. They're looking to see what we're going to be doing. They have their policy decision later in the week, seeking further indications in the right direction of global interest rates. China's putting a big pressure on global economy, closed higher after data showed the country's credit demand improved and deflationary pressures eased, while fresh stimulus also boosted sentiment. Let's hope that gives us a little bit of a boost beginning of the week. Japan closed lower today. Now, this is important. Following reports suggesting a possible early end to the Bank of Japan's negative interest rate policy. Remember I told you about 6 months ago, new prime minister, they're going to get rid of their negative interest rate policy. They're going to start raising rates, which is why Warren Buffett is investing into this country. Do you remember somebody by the name of me telling you this? In an article in the Yomiuri, sounds very much like Yuri. Newspaper. Did you know that Yuri is a Japanese girl's name? Now you guys know why I changed my name? Newspaper published over the weekend, Bank of Japan governor said the ending negative interest rates could be an option if wage and consumer prices increase appear to be sustainable. I'm telling you, they're going to be increasing their interest rates. They're going to be increasing their rates. Now, day trading stocks. I want to talk a little bit about day trading stocks because, well, we're here. Tesla. Oh, yeah, baby, Tesla. So let's talk a little bit about Tesla. Tesla right now, if you look at this trend line, this is very, very key. Tesla is breaking above the 200-day moving average, the 50-day moving average, obviously the 100-day, which is right here. Even the 8-day, yes, we're above a very key support level. The volume, even though we were on a holiday, volume was at or above average. And now we're breaking higher and we're already up 6%. If you look at the price overnight, you'll see that we haven't been fluctuating all that much. We went from 264 to 263. That's really good. That's good momentum. Here's how you play Tesla. I know this is counterintuitive, but this is how you play Tesla. You wait for the first half an hour of the day and you do nothing. Zip, nothing. And then you wait for the stock to take out the high. Now, you don't want to trade Tesla to the downside. You don't. It's above the key averages. It's above a key support level. It's actually looking really bullish. So what you want to do is you want to wait for Tesla to trade above 264, about 265. And if it goes above 265, you buy it and you put your stop below the day's low. So for example, if this was the current range, if this was the first half hour of the day, you would buy it at 265 and you would put your stop loss at 262, 250, say, a little bit below, like right here. So you want to get in after the first half hour and then you want to put your stop loss under the day's low. That's how you play Tesla today. Hope you guys are enjoying this video, and I hope you subscribe to my Telegram channel, rogerscott.com/Telegram. Like our videos, subscribe to our YouTube channel, join my community. Now remember, today at noon, I'm going live, VIP room. It's still open to the public. They're trying to talk me out of closing it, but I'm going to be closing it soon. Get in there. It's Monday. I'm going to give you a lot of updates. It's happening today, and we'll talk about Tesla. We'll talk about Oracle. We'll talk about Adobe. It's going to be great. It's going to be great. Now, folks, I just unveiled my 5 top stocks and an option play for the month of September. That's right. It's a historically weak month because a lot of people are locking in gains, covering tax losses after the summer. In fact, it's the worst performing month of the year on average. That, along with big economic problems in China, a Fed intent on hiking rates, and lackluster start we've seen this month so far, and it's a recipe for a major caution. But I have 5 stocks and 1 option trade that happens to really be on my radar this month, and I want to give it to you for $5? $5? Heck, that's less than a coffee at Starbucks. I believe these stocks will continue to gain momentum as the month goes on. So click the link below and I'll rush this report to you. $5? I don't even know how you could say no to that. Remember, join my VIP room today at noon. Subscribe to our Telegram channel. I give free trades and really good picks over there. And I'll talk about CRM, which is at Salesforce is having a conference called Dreamforce. And there may be some upside on Salesforce. And I'll talk about that today in my VIP room as well. Yep, it's already higher. I'll talk to you guys later, and I hope you have a great week ahead. Bye.